Kenyan lender Diamond Trust Bank posted a 41% jump in a pre-tax profit. That's for the first 9 months of the year, aided by growth in interest income on its loan book. Joining us now on the line from Nairobi, Alkarim Jiwa, General Manager of Finance and Planning at Diamond Trust Bank. Alkarim, thanks so much for joining us to break down the numbers. So just looking at your interest income growth, 85% growth for the first 9 months of the year. I mean, at the beginning of the year, did you foresee being able to grow this part of the business earnings, by such a huge amount? I mean, was it a deliberate strategy or just a function of market forces right now?
Well, I would say it's a combination of both. We certainly didn't expect our earnings, and in particular the net interest earnings, to perform as well as they have done for the first 9 months. This is partly due to market conditions. There has been, as you may know, a high interest rate environment prevailing in the country for pretty much of 2012. And most banks, DTB included, have benefited from the high interest rate environment in terms of high NII earnings. But there's been growth in underlying business as well. We've seen our loan book grow by close to 15% in Kenya, as well as in the other markets where the group operates in the region, despite the high interest rate environment. So we're encouraged by that growth, as well as that in liabilities.
When it comes to the loan book, I mean, growth in net loans and advances to 85.5 billion shillings, that's for the first 9 months of the year, as you were saying. But when it comes to market share growth, have you been able to chip away at other competitors' market share?
Yes, when we do analyze our earnings, as we did, say, for the first half of the year, we did see our market share inch upwards across key parameters, including the loan book. Currently, we have a market share of just under 5% in the loan book area. And as banks begin to publish their third quarter earnings, we expect to retain and perhaps even build on our market share as far as our loan book is concerned.
Now, when it comes to provisioning, one of the concerns from the market has been the fact that you have increased provisioning. I suppose it's always a function of growing your loan book. But what is your provisioning policy right now? And to what extent are you possibly seeing a tick up in non-performing loans?
Well, in recent years, Diamond Trust Bank has been pursuing a conservative provisioning policy. And so if you look at our numbers in greater detail, you will notice that we do provide for our entire non-performing loan portfolio. We do not take into account the value of securities. And when it comes to providing for unimpaired losses or general provisions, we are also quite conservative. Historically, our NPL history has been low. Our NPL ratios have been amongst the lowest in the industry. But in recognition of the inherent risk to the business, and greatly due to the conservative provisioning policy that we have, we've been providing prudently over the years. So on the NPL, as NPL exposure is covered, this has been fully provided for, as has been the case for the last couple of years.
You mentioned, of course, the fact that the high interest rate environment has helped boost that interest income, but now we're in a completely different environment. Interest rates have been cut by 500 basis points this year. You're looking at inflation being far below the central bank lending rate, so expectations that we are going to see further interest rate cuts. In this type of environment, this new environment, how do you intend to continue to grow earnings in light of the fact that interest rates are a lot lower right now?
You're quite right. I think interest margins will come under pressure as the central bank reduces its benchmark rate, and we will see banks across the spectrum having the interest rate margins come under pressure. What we intend to do is to continue with our revenue diversification strategy. Our reliance on fee income, non-interest income sources continues to grow. Underpinned by launching new products and extending new products and services in the market, continuing with our branch expansion program across the region and in Kenya, and also taking advantage of agency banking, which is a channel of banking that the central bank has enabled by providing an appropriate regulatory framework. And we believe that by use of these channels, the traditional ones like branches, as well as non-traditional channels through agency banking, technology-anchored channels, etc., we should be able to diversify our earnings base.